Everyone, hi. Good day, Bob. Hi, Jamilu. Hi. Hi, Ellen. Hi, Amar. Hi, Amrin. Andres, BL, Bob, the other Bob, Charles, Gerhard, Jack, Jamilu, Kelvin, Matej, Neil, Paul, Shayed, okay, Simon, Stephen, Stuart, and Zafar. Hi, everyone. Hi. I'm just saying hi to those who are already joined, who's already joined, those who are still joining. Hi, everyone else. I still see the attendance list moving. Let's give everyone like a minute or 2 minutes to like get like join and settle in. Hi, morning. Nice surprise. Thanks, Simon. Good to see you too. Okay, while we're waiting for everyone to join, I do still see the attendance list moving. So let's just give everyone like a sec. Good morning from London. Hey, Paul. Welcome. I just want to check if everyone can see my screen clearly. You can see that it says support and resistance, part 1 of 2 parts. And you can hear me clearly, right? I'm assuming you guys can hear me clearly because I see a lot of you saying hi back. Okay, all good. So thanks, Simon. Thanks, Muhammad. Thanks, Zara. Cool. Thanks, Paul. Okay, attendance list is still moving like crazy. Still a lot of you joining. Maybe 1 more minute. Anyways, today's topic is more of a recap. If you are regular here, you would already know this topic, but we're just starting the year with just refreshing our memory so that we can start the year strong. Hi, welcome. Okay, cool. I see the attendance list slowing down. So the rest of you who are just joining, welcome to our webinar today. Our topic for today is support and resistance. Okay, a very simple topic, but I would say it's a very, very, very important topic. I would have to say support and resistance is so crucial. I actually know a trader. I don't personally know him, but I've watched some of his stuff. Okay, I've read some of his stuff. He's made more than $100,000 US dollars on the monthly basis. I mean, his record is 100,000 US dollars, and his main strategy is support and resistance. Okay, so my own main strategy is not support resistance; it's a combination of a lot of things. But that guy who only uses support and resistance, like his entire strategy, maybe 90% of it is support and resistance. It says a lot about support and resistance, and it says how strong and how important support and resistance is to technical analysis and why you should master it. Okay, so if you are new here, please, I hope you're taking notes. For those who are regulars here, I know there's so many regulars. I see Simon, Kelvin, BL, so many, Jamilu. So many of you are regulars here, Paul, right? You definitely already know what support resistance is, but it's good to do a refresher. Okay, cool. Let's start. Why is this not going next? Okay, disclaimer, you guys know how this works. Any information contained in this webinar should not be construed as trading advice, okay? This is purely educational. The whole point of IC Markets making these webinars for you guys is so that you guys can grow your trading account. That's the whole point of these webinars. The whole point is to come in here, learn something new. If you already learn it, maybe refresh your memory, use it as a recap, and then hopefully it helps you grow your account. We ultimately just want you to be profitable traders. We want your accounts to grow because you guys winning is actually good for everyone. Okay, so we want all of you. Hi, nice to see you, Ron. Hey, Fabio. Okay, so you guys winning is good for us too. We want you guys to win. So please, please do not be shy. Ask questions throughout the webinar. Anything to do with trading, anything to do with support and resistance. Since today our topic is support and resistance, go crazy with any good. Oh, hey, that Troy. Welcome. Okay, if you are here, hi. If you are here for the first time and you have any questions at all, do not be shy, because again, the whole point of these webinars is to help you grow as a trader and to grow your account. So if you are not asking questions, if you're shy and you're not asking questions, the one that loses out is actually you. Okay, so don't be shy, just ask questions. Shoot, we're all here to learn anyways. Okay, we're all here to learn. Yeah, I know. I remember at one point we were answering a lot of questions and some guy was so unhappy about it. But the whole point of this webinar, again, is to help you guys to grow your trading skill, right? So if you're not asking questions and if we're not answering those questions, it's very hard for a trader to grow. Okay, so our agenda for today is support and resistance. This is part 1 of 2 parts. We're going to look at swing high and swing lows. Swing high and swing lows, super easy, but it's super crucial when it comes to support and resistance, because that's where you're going to be looking for your support and resistance. Psychology of pullback, support and resistance, and horizontal overlaps. So combining different studies. Okay, so let's look at all of this. Again, do not be shy. If you're not asking questions, if there's something you really want to know and you're not asking, the ones losing out is you. Okay, so don't be shy. Why is it not going next? Okay, introducing your host. I think a lot of you already know me. I see a lot of people, a lot of you call me Bob. For those who are calling me Bob, that means we know each other. Okay. For those who are new here, my name is Cassandra. You can call me Cass. I am an external analyst. I'm also a prop trader. So I do not run the award-winning research firm. I'm assisting the award-winning research firm, Everest Fortune Group, based in Singapore, who has won, who is a finalist for the best Forex research and best equity research for 2019, 2020, and 2021. Okay, this team, our entire team actually has very good traders and very qualified people. Okay, so one thing important I think you guys should know about me in terms of trading is my experience in trading. So when it comes to trading, one thing I like to share with you guys is that I have personally passed my Forex fund and FTMO 6 times. For those who don't know what these are prop trading tests. Okay, so for a trader to pass this test, the trade 8% a month, that means 30 days. Okay, so 30 days, Saturday and Sundays are not counted, so technically you only have 22 trading days to make 8%. That's for my Forex fund and 10% for FTMO. So I passed these tests like 6 times already. I'm currently taking my 7th test right now. My aim is to get $1 million funding. Every time I take a test, it's $100,000. So I need to pass 4 more tests and I'll get $1 million of funding. Okay, so I think this is important because you know that whatever I share with you guys today is basically my own experience. Okay, it's how I managed to pass these tests 6 times, and hopefully whatever I share with you guys will help you guys grow your trading account. Hopefully you guys are doing 8 to 10% a month as well. Oh, what happened to award winning last year? Oh, these are probably not updated, Simon. Good catch though. I think some of us have not realized that it's 2023 yet. So I didn't prepare the slides. I think someone prepared the slides and probably didn't realize it's 2023. I'm very sure we're also the finalists for 2022 as well. What is the story behind Bob? Okay, there's 2 Cassandras in our company, and to avoid confusion, I took the liberty of naming myself Bob. Yes, because every time Des, who you guys have probably met, comes out from his room and he says Cassandra, both of us will turn and be like, yes. And then I'm just like, okay, enough is enough. Just call me Bob from today onwards. My name is Bob. Okay, so let's start with proper stop loss and TP placement. These are not the correct slides, I think. Okay, Sorry, again, I didn't prepare slides. That's why it's probably not. Hey, Sam, it's not in the correct order. Okay, so proper stop loss and TP placement is in accordance with your support and resistance. Why? Because once you identify your support and resistance, you're going to use those support and resistance as entry, stop loss, and take profit. It's so important and so crucial to be able to identify support and resistance, because I think the last time I talked to you guys was maybe a week ago or 2 weeks ago, and I remember very clearly someone asking me, how do I tighten my stop loss? Okay, so to tighten your stop loss, you need to have a very good entry. That means your entry, when price gets to your entry, it's going to reverse there and then. Okay, there's not going to be like a second thought. There's not going to be a higher zone or whatever. Your entry is the perfect entry. And to identify perfect entries, you need to identify perfect support and resistance. Well, there's no such thing as perfect in trading, but the best of your ability. Okay, you need to identify support and resistance to the best of your ability. Happy New Year to you too. Okay, so significant swings will make really good support and resistance. Okay, so you guys can see this. There's a swing high right here. There's a swing low right here. There's a swing high right here. Swing low right here. Swing high, swing low, swing high. Why is this important? The first time I just learned trading, the person who taught me trading actually told me to go home. Yes, this is the one where I paid a lot to attend 2 days. I think it was a 2 days course. I think I paid about $10,000 to attend a 2 days course just for the guy to teach me really basic stuff in trading. So you guys got it good that IC Markets are doing these webinars for free. Okay, I had to pay a lot to learn trading. So the guy who I went for my first trading course, he's from CNBC. Okay, he's an analyst from CNBC. He said to go home. The best thing you can do for yourself as a trader, go home and identify swing highs and swing lows. Like just literally pull out your charts and take out a paintbrush or a pen. There's a tool, there's a pen tool on TradingView, and just draw out swing highs and swing lows so that you train your eyes to be able to spot swing highs and swing lows. I know it sounds like a very simple task, but you will be surprised when two people look at the same charts, two people will see different swing highs and different swing lows. Okay, because it's just all practice, right? Like a lot of our I have interns coming into the company, and Des tells me that, oh, can you teach the intern? And I'm just like, okay, can you identify the swing high? And the intern's just like, what swing high are you talking about? So it really is just practice. It may seem like a very simple task. It is a very simple task. Honestly, I would think, I think I told you guys that I have a baby on the way, okay? When my baby turns 5, I'm immediately gonna teach my baby to identify swing highs and swing lows, because it is such a simple task that, yes, a 5-year-old, a child will be able to identify swing highs and swing lows. It's such an obvious, it's just drawing out the mountains, right? It's so easy, but it's still, practice still makes perfect. So I do recommend you guys going to TradingView, pull out your paintbrush or your pen or whatever it is and draw, like this example, draw it and then just circle the swing highs and swing lows, train your eyes to spot it. Okay, will the zigzag indicator help? I personally have not used the zigzag indicator before, but if the zigzag indicator is an indicator that pulls out swing high and swing low, I'm very sure it will help. You guys must be wondering why I have not used this zigzag indicator before, because there are hundreds of indicators out there. It is impossible for one trader to have used all of it. If that one trader have used all of it, like, bro, you have a lot of free time, and you have a lot of free time. But I personally have not used a zigzag indicator. If you have and it identifies swing low and swing high, yes, that's a good indicator to use to train your eyes. What time frames are you using? Depends on your lifestyle. If you are a, hey Desiree, if you're a swing trader, use the bigger time frames. If you're a day trader, use the 4 hours and 1 hour. If you're a scalper, use anything below 1 hour. Okay, so the time frame that you use depends on your lifestyle. Okay, why do I say depends on your lifestyle? Because if you are someone who is super busy, you have, for example, you have 4 kids running around, you're a full-time mom, you have 4 kids running around, you need to change diapers, blah, blah, blah. You're not going to be sitting in front of the charts all day looking at this, sitting in front of the screen all day looking at charts, right? You're not going to do that. So you're probably going to end up being a swing trader. But if you are a day trader, let's say you are someone who do a 9 to 5. Every day you go to your office, you do a 9 to 5. Then you tell yourself, okay, every day, maybe 15 minutes before my lunch break, I'm going to look at the charts. Okay, then you kind of can qualify for a day trader because you're kind of looking at the charts every day and doing analysis every day. Okay, so your lifestyle depends on the time frame you look at. Okay, thank you, Shayet. Thanks, it's a very helpful tip because I get a lot of confusion when I see intermediate swings, but use a brush helps to identify and remove the less important ones. That's right. Using a brush can help you identify and spot the very obvious swing highs and swing lows, and those are the ones that you want to keep, and those are the ones that you know, will help you with your entry, stop loss, and take profit. Okay, next. This is the wrong way. So I showed you the correct way to identify the swing highs and swing lows. The wrong way is this. Okay, why is this wrong? Can anyone let me know in the chat box? I know the regulars here must be like, we already know why it's wrong. But anyone who's not the regular, or maybe the regular still wants to challenge their mind today, you can contribute with your thoughts. Okay, thank you so much, Brian. Okay, so Brian is saying because it's not significant. That's right. So you can see we're drawing all these zigzags here, but all these little swings here, they're not significant, right? You want very significant swing highs and swing lows. Okay, so this is a very significant one. You can clearly see out of this entire structure, this is the swing high. But when you go down, if you're going to identify every curve, every turn, then you're going to have a lot of swing highs and swing lows, and those are not relevant. Or well, I wouldn't say they're not relevant. Maybe if you go down to the even smaller time frame, they will be relevant onto the smaller time frame. But a lot of times it's not relevant to the time frame you are currently looking at. Okay, so you only want to identify very obvious ones. Let me pull up my pen. Let me show you guys where do I think it's obvious in here. Okay, so how I would have drawn this is like this: swing high, swing low, swing high, swing low, swing high, swing low, swing high. Okay, so based on my drawing, there's only one swing high, swing low here, swing high here, swing low here, swing high, swing low. Okay, but based on the example that's going on right now, the person that's drawing this is basically just identifying every turn and every curve, and you shouldn't be doing that because why would you say they would you say they are just noise? That's right, they are just noise. These are just noise. You want to find very significant ones because chances of price reversing at those significant ones is higher than those like tiny ones. Okay, cool. Okay, so recent significant swing high and low can be used to highlight support resistance, but they are not very strong. Okay, so again, like I said, I know a guy. Well, I don't personally know him, but I watch a lot of his videos. Okay, I know a guy who makes 100,000. I watch this guy who makes $100,000 a year, a month, and he only uses swing high and swing lows. It baffles me. I don't know how true these online videos are, but why we say swing high and swing lows alone is not strong enough because I'm gonna have to draw you that example. I know you guys, a lot of you here who are regulars has seen this example before. Okay, this is Bob. He's walking to the left. Oh, sorry, to the right. He reaches the door. Okay, so your door here is your representation of support and resistance. Okay, so because there's a door here, we know that there is a resistance to get into the next room, right? We know that there is going to be some kind of resistance or barrier to get into the next room. But the question is, if this door is open, that means there won't be a lot of resistance. Bob can just go open the door, push the door open, go into the next room. Okay, right? So that means he can just continue to the next room. Okay, but let's say we find out that the door is locked. Okay, we find out that the door is locked. We find out that behind the door there are boxes. There are like a lot of boxes. This family just moved in and they have boxes of books, and I don't know why, for some reason they decided to place it behind the door. Okay, so if you are Bob and you come to the store and you know there are boxes, the door is locked, do you think you're going to have a hard time opening the door? Yeah, you're going to have a hard time opening the door, and therefore you have no choice but to turn back, right? Similarly with price, okay, I'm going to bring this analogy to trading now. Okay, similarly with price, when price reaches a support and resistance, okay, if that resistance is so strong, it has so much barrier, price will have no choice but to reverse. Okay, and that's where traders will enter for the sell here. Okay, they will enter at the sell at that very strong resistance door. Okay, but let's say that we identify that there's a door here. Okay, look, there's a swing low here. I'm going to identify there's a support here. But if this door here is unlocked, there's no barrier, there's no boxes behind, price is not going to have a hard time, and therefore price is going to open the door and continue with wherever it is it wants to go. Okay, and that's where traders will enter here for a sell as well. Okay, are we okay? Do you get my analogy? You guys understand what I'm trying to say? Give me a sec. What would be the boxes? Okay, okay, so, oh, hey, Henny. I see a lot of you saying yes, yes, yes. I see some of you saying no. Okay, I will explain to you in a while. I think it's better to explain when we're on TradingView. Okay, so I've got a very good question from Shayed asking, Hussein, should I call it Hussein instead? Okay, asking what would be the boxes in terms of trading. Okay, so the boxes would be things like Fibonacci levels. Okay, so Fibonacci levels, like your Fibonacci retracement, Fibonacci projection, Fibonacci extension, whatnot. Okay, other things will be indicators, and other things will be how many times price came here and turned back. Okay, so I'm gonna have to go to TradingView later on at the end of this webinar to further explain what I mean. How do we know the strength of the support resistance? Good question, Sarbai. I'll show you again in a while. Just let's KIV that question until we get to TradingView. I need to finish these slides, then we can go to TradingView now. It'll be better. Yes. M is just good. The boxes supply resistant, supply and demand. Supply and demand, I would say, is more like momentum. So when I think of momentum, I think of how strong this person is. For example, so let's say Bob reaches this door, he pushes this door, right, and he realizes that he can't push the door. He can just turn back and go to the gym. So he goes to the gym, he now has a lot of muscle. He's so buff now, and now even though there's so much resistance there, he can still break the door open and go through, because sometimes we see that there's so much resistance in that area and price still somehow manages to break that resistance area or that support area. It just means that the momentum is so strong. That means the momentum can be anything. The momentum can be like the economic news is so bad, economic data is so bad that there's no choice. Price will have to break that support area, and then that's how it breaks. Okay. Is there any specific time frame which indicates strong support and resistance? Nope. Actually, the higher the time frame, the stronger the support and resistance will be. Structure is always higher on the bigger time frames. Okay, so I'm going to quickly finish this slide so that we can quickly go on to TradingView so that I can show you guys what I'm saying. Okay, this is what I was talking about. How do we measure strength of support resistance? The more times price goes to its exact area, okay, you can see that price came here one time, came here twice, came here 3 times, and came here 4 times. It came to this resistance area 4 times and turns back. When as a trader, I see this, what does it tell me? It's just telling me that there is a very, very strong door. That door must be locked. Okay, that door, there is a door there, and there's boxes behind the door, and there's so many locks on the door. That's why price is having a hard time, or Bob is having a hard time opening the door, and therefore every time Bob reaches here or price reaches here, it needs to turn back. It needs to turn back. So just looking at this alone tells me that this area, this resistance is a very strong resistance, and the next time price comes here, if price comes here again for the 5th time, as a trader, what do you think I'm going to do? Do you think I'm going to prepare for a sell or a buy? Okay, that's right. We will be preparing for a sell because we already know that there's so much resistance here and price is going to have a hard time. I'm not saying that it's impossible for price to break this area. I'm just saying that it's super hard for price to break this area. That's why I'm always saying in trading, there's no perfect setup, there's no perfect analysis, but your job as a trader is to find high probability setups. Okay, so when I look at this, the first thing I immediately comes to my mind is that, okay, price is going to have a hard time because the last 4 times price came here, it couldn't break this area, right? So it's going to come here the 5th time, and I think it's not going to break the area again. And then I can confirm it with other things. I can confirm if, like, depending on the pair, let's say XAU USD. Okay, I can confirm, is there weakness in the USD, blah blah blah. Okay, you can combine it with fundamental analysis. I don't usually do that, but you can. If everything checks out, everything confirms, this is where you enter for a sell. You enter for a sell here, you can probably put your stop loss just above this area, and then you're probably going to make quite a bit of profit. Okay, so that's exactly one form of identifying strength in support and resistance. Okay, as a result, at a level will better help new followers to relate to further floor and ceiling strength made of wood and weaker concrete. Oh, yes. I think I used to use that example, Simon, the floor and ceiling example. So Simon brought up a very good point. Another way for this is for beginners, okay? For those who are still a little bit confused, another way you can think of price is that this is your ceiling and this is your floor, okay? If this ceiling is made up for, we're just pretending price can fly, okay? Price is someone who flies up and down, okay? Moves up and down, okay? If this is a very strong ceiling, price will, when price reaches here, price has no choice but to turn back. If this is a very strong floor, when price reaches here, price will have to turn back. But if this is a weak floor, okay, if this is a weak floor, when price reaches here, price is just going to break and continue down. Okay, so that's another good analogy that I used to use all the time. Yes. Okay, let me see bigger in your view. What is the bigger time period in your view? Depending on your lifestyle, again, if you're a day trader, 1 hour and 4 hours is good enough. Thank you, Henny. Would you call this a good indicator for support and resistance? Some prices turning around MAS. Okay, so the thing, Gerhard, I'm sorry if I'm pronouncing your name wrong. Okay, the thing about indicators, right? You're talking about MA as in moving average. So moving average is a kind of indicator. So I always use indicators as the last of my analysis. When I'm doing my analysis, I'm looking at the charts. Indicators is the last thing that I will use to decide whether I'm going in for a buy or a sell. Okay, most of the time I only use indicators as confirmation. Why? Because if you go into TradingView, you go into indicators, there's more than 100 indicators. And on top of that, every other day or every other week or every other month, some Tom, Dick, and Harry trader is creating a new indicator. Okay, it's not that hard to create an indicator. So indicator is the last thing I'll always use when I'm doing my analysis. But some very more popular ones like moving average would be a good one. Okay, psychology of pullback. Let's quickly do this. Okay, so what is the psychology of this? Why is it, for those who are always in the webinar, why is it, or for those who have been trading for a while, do you notice price comes here, turns back, comes here, turns back, comes to this area, turns back. On the 4th time, it finally breaks. Okay, it finally breaks. Do you notice a lot of times after price does a breakout, it tends to come back to the area that it breaks out. Okay, so what is the psychology of that? What is the reason for that? Okay, the reason for that is that because traders, so the market moves based on humans. Okay, the only humans are moving this market. The market has to move because people are pumping in money. They're either buying or selling. That's why a lot of people are buying in this area, and that's why it is moving up, right? So why is it so many times when price after a breakout, price tends to come back to this exact same area, the place that it broke out, and that's a retest? Okay, why? Because you think about it, if you are a trader, you're a trader, right? For the longest time, let's pretend this is $10. Okay, this is $10, for example, and this here is $20. Okay, for the longest time, price cannot seem to break this $10 mark. Okay, the thing about humans, the thing about the market, it's controlled by humans, right? Humans are so full of fear, you have no idea. Like I think Des or someone told me before, humans are designed to be the worst trader ever because of their emotional fear. So a lot of times you know that it's a buy, you don't get in for a buy because you're scared you're wrong. A lot of times you move your stop loss because you're scared you're wrong. A lot of times you don't take profit because you think that there's more profit to be taken. Humans are the worst traders alive because of emotions. Okay, so for the longest time, price has been $10. It finally broke. If you are a trader, your average human, so the reason why it even comes back here, your average human will see price coming here, and the first thing they'll think is, oh no, it's too overpriced. It's so overpriced. I'm gonna sell here. I'm gonna get out here. I think it was $10 for the longest time. For it to be 20 is impossible. It's so overpriced, and that's why a lot of times traders give up their position here. Price drops a little, and then it comes back to this area of $10, and then you will see the professional trader or institutional trader saying, oh, okay, good answer, Ijaz, right? The retest is to take orders for buy and collect orders to go up again. But who are the ones collecting the orders and who are the ones getting in some more orders? It's usually the professional traders and the institutional traders. Okay, the people who sell here are usually who maybe they sold at $16. Okay, the people who are not holding are usually the retail traders who don't really know the direction or whatever. But when it comes back to $10, you will see professional traders, institutional, they come in and buy again. So if price successfully passes this retest here, this is where a trader will get in again for a buy. Okay. So the reason for a retest is always because of fear. They're always fearful. They don't know if that price is going to hold. That's why there's always a retest. After the retest, if price successfully holds above this $10, usually that's when it shoots up again. Okay, so it's always just a test. The question is, I have sometimes in this box, paying a green box, I draw it too thick and my entry tolerance can be quite big. Okay, I sometimes have that problem as well, Desiree. That's why when I see that my zone is too big. Okay, so Desiree is saying that the pink and the green box, so your entry or stop loss, that zone that you draw can sometimes be too big. I also have that problem sometimes. Honestly, when I encounter this problem, I totally just don't trade that setup. I don't trade that setup because the risk to reward doesn't make sense to me. Or if I was going to trade, there are times where I'm so stubborn, I'm like, oh, I really need to get into this trade. Okay, so you see this entire box here? I wait for price to come as low as possible to this bottom part here, and I get in here. If it doesn't come to this lowest end, I don't get in. So there's also a lot of times that I miss trades because of this, but I don't mind missing because at least my entries are safe. I don't mind. I'd rather be safe than sorry. You know what I mean? Okay, let's go next. So same with the pullback resistance. That's same psychology. It's there's a retest. They want to see if price can really hold at that. Really hold. Okay. Overlap support resistance. Okay, so this again is how you measure people buy crazy and then deny high price. Exactly. Because the market is just run by humans, and humans are very fearful creatures. Okay, so I won't even lie, like I passed 6 prop trading accounts. Sometimes when I lose, I also feel fear. Okay, so it's just human to feel fear. Like, we're not robots, right? We're not machines, so it's normal for us to feel fear. Like, even today, yesterday I lost the trade and I did feel a bit of like anxiety, not anxiety, but like, well, yes, I would say anxiety. I'm like, why? So it's okay to feel fear. That's why you have so many trading psychology books that will help you get past the fear, right? There's so many trading psychology books out there that will teach you that don't take it so hard. This is just a numbers game. We have to see it in a very statistical, very logical way, and we won't get emotionally hurt when we lose. This is all correct, but in which time frame do you look at? Hey Matej, again, the time frame depends on what kind of trader you are. If you are a swing trader, yes, you can look at the 4 hours and day one, the daily time frame. If you are a day trader, the daily time frame is not going to be relevant to you. If you're a day trader, the time frame that's relevant to you is the 4 hours and the 1 hour. If you're a scalper, the daily time frame is definitely not relevant to you. If you're a scalper, you should be looking at things below 1 hour. Okay, so this is exactly how you identify strength in support resistance. We can see overlaps. Overlaps are when this used to be a resistance. Do you see price came here, it used to be a resistance, and then it broke. Now it's not resistance anymore, it became a support. Okay, so it became a support, price came to retest it. Okay, so overlap, the name overlap is just a term, it's just a name. Okay, it basically means this resistance has turned into a support. Okay, so this is called a overlap, a horizontal overlap support. Okay, that's the name of it. Okay, because it's horizontal, because support and resistance can also be ascending and descending. Support resistance can also be a channel. Support resistance can also be your Ichimoku cloud. There's many forms of support resistance, but this is your horizontal, because we're looking at horizontal, one straight line. Horizontal overlap. Overlap means that it used to be a resistance, now it's a support, or it used to be a support, now it's a resistance, and you put it, the name behind support resistance, as in what is it now. Okay, so this is called horizontal overlap support. Okay, this is just we're just familiarizing you guys to the name. Let me erase this. Okay, so an overlap resistance happens when price touches from the top and from the bottom 2 times, and it shows the price respect the particular level. Okay, so we can see this used to be a support, it broke, now price comes back to that same support level and turns back, comes back to the same support level and turns back, then this is called an overlap. Okay, for those who are not very clear with names, it's okay. Sometimes I get confused with names too. This is just more like good to know. This is just good information to know. It's not that. I think terms or names, it's good to know, but I don't think it makes you a better or worse trader. Okay, combining different studies. Okay, so this is where we test the strength of support and resistance. This is very important. This is exactly what I wanted to show you guys when we go to TradingView. How do we find support and resistance, the strength, support and resistance? Okay, we can see confluence. We look for confluence. That means that support and resistance lines up with Fibonacci, it lines up with indicators. Okay, so let me pull out my pen. Okay, so I was saying just now there's many forms of support and resistance. One form of support and resistance is descending trend lines or ascending trend lines. So we can see that there's a channel here. Okay, there's a channel here. This top part here actually works as a resistance. This cloud here, this is an Ichimoku cloud, this is an indicator. This works as a resistance. This bottom part of the cloud is resistance number 1. If price manages to break this cloud, it will go higher, and then you have to test resistance number 2 again. So How is this a confluence? It's a confluence because for price, let's say, I don't know why you'll be putting your stop loss here. Okay, let's say your stop loss is here. Okay, you think about it, for price to reach your stop loss, for price to ever reach your stop loss, okay, sorry, it's too messy. Okay, for price to ever reach, okay, that's too far away. I'll put the stop loss here. Okay, let's put the stop loss here, somewhere around here. Okay, let's say you're in this trade. For price to ever reach your stop loss, it would first need to break the channel. Okay, it will need to break the channel. It will need to break this Ichimoku cloud. It will need to break this resistance here, this horizontal resistance here, before it can even reach your stop loss. So it's the same as that door example I had just now. Okay, for Bob to break the door, okay, it would first need to break the lock. Okay, remember there was a lock just now, right? It would first need to break, he would first need to break the lock. He would first need to push away the boxes behind the door before he can enter the room. Okay, so I'm not saying that price will never reach his stop loss. I'm just saying that there's so much resistance, there's so much like obstacles. Like maybe Bob is, he's the strongest man in the world, maybe he has a lot of muscles, right? Maybe when he reaches here, he manages to break the lock, but will he be able to push the heavy boxes away, right? He might if he's super strong, but the thing is there's just a lot of resistance. That's why confluence will identify the strength of resistance by combining. Only people, institutions can remove boxes. I totally agree with Ijaz, right? They can move boxes because institutional trading is a lot of like market manipulation. Sometimes I don't want to believe it too, but I think it's real, right? There is still market manipulation going on today. Okay, so sometimes the only way is like you seen very ridiculous moves in the market that doesn't make sense. Sometimes price wicks all the way here, it breaks all the resistance, and then it comes back down and continues with the downtrend. Okay, I don't see it that often anymore nowadays, but it does still happen. Okay, so that is just the institutions, that's institutional trading. Okay, the other thing is, how is it possible for price to reach stop loss? Is that suddenly, for some reason, okay, the government just announces, they make an emergency announcement. For some reason, they just make an announcement, oh, we found like 3 million kilos of gold, we're rich or something. Okay, the economy is doing well. Suddenly you see this downtrend just immediately turns into an uptrend. Okay, so it's the same as what I was saying. Bob, okay, he previously tried to open the door, he couldn't, so he turned back, he went to the gym. He goes to the gym, he now has a lot of muscles. He has a lot of muscles now, he comes back and tries to open the door. So the momentum or the strength of Bob has changed. Okay, so the thing that has changed is momentum. So it used to be a downtrend, but because of the news, the government suddenly announcing that, oh, economy is doing great, yada yada yada, then now we have a lot of strength. Okay, we have a lot of strength. Okay, so these are the few things that will be able to break technical analysis support resistance. Please take note that technical analysis is only one part of trading. Okay, there's so many parts to trading. There is fundamental analysis plays a big part in the trading. I do not like fundamental analysis because it requires a lot of reading, okay, a lot of following up the news. So every time I know that there's a news coming, like I know that tonight, like for example, if I know tonight the US government is going to announce jobless data or like economic data, today I don't trade. Okay, today I don't trade because I am purely a technical analyst. Okay, I purely use technical analysis to trade, and there are a lot of times fundamental analysis can overpower technical analysis. Okay, so if you are someone who also uses fundamental analysis, it's totally fine if this is coming out. But if you are not someone who follows fundamental analysis, my advice to you is that when there is a big news, do not just go do something else. Just watch TV or something, right? Go hang out with your friends. Okay, so this is another example. I was just telling, that's basically, this next picture is basically what I was going to show you guys, what I was explaining just now. Q&A. I'm going to end this here so that we can go to trading view. Okay, and then we can identify support resistance. Okay, so thank you for pricing my guide. We're going to move on to trading view. We're going to practice identifying support resistance. Oh, session disconnected. Somebody is logged into your account. I wonder who. Okay. Okay, cool. I don't know who. I hope we don't get locked out. Okay. Okay, this is a GBP USD. This is just random. This is the first thing that came out, so we're going to use this. Okay, how do we identify support resistance? We're going to identify swing highs and swing lows. So this is the swing low here. This is a swing high here. This is a swing low here. This is a swing high here, and then here. Okay, so we know that there's going to be a swing high here. So let's erase everything. I'm going to pull out support and resistance. We're going to use the swing high and swing low that is closest to price. Okay, so the swing high that is closest to price is right here. Okay, there is a swing high right here that is closest to price. Right here. If I pull it, and I pull it, it's going to connect to this area. Okay, if I pull it even more, it's going to connect to this entire area. Not really, it cuts through. That's why support resistance, like Desiree was saying, is mostly a zone. Okay, it's usually a zone. Support resistance is usually a zone rather than one single price. Okay, so this zone here is our resistance area. I'm going to turn it red because red, in my mind, I know red means resistance and I know green means support. Okay, that is just the system that we use to not confuse ourselves. Okay, if you want to be even more safe, just go to the text and type resistance. Okay, so that you know for sure. Hey, where's my text? Okay, doesn't matter. Okay, so we want to use a support resistance that's closest to price. There is a swing low here. Do you see it? But do you think this is the best swing low to use? If there is any currency news, does that mean you don't trade only that currency? You don't trade any currency at all? I don't trade at all. If I know there's going to be news like tonight, for example, I do not trade at all. That means that day is the day that I take a break from trading. There's 22 trading days in a month. Okay, Saturdays and Sundays are not counted. You do not have to trade every single day. Okay, you do not have to trade every single day. Let me tell you, I passed this prop trading test 6 times, and there are a lot of times I don't even trade. Like sometimes I only trade like maybe 2 times, 2 days or 3 days a week, and because my profit is 2 to 3% or 2%, I still end up passing the test within the month. You don't have to force trades all the time. Okay, yes, you don't need to force trades. Yes, I don't think, thank you, just this is not a good support because it's not significant. Okay, we want to find a significant support. Remember one of our slides just now, this is not significant because look at it. If you're going to take this as a swing low, you're basically taking every little curve. You're taking every little curve. No, you want to take the very obvious ones. Okay, so the very obvious ones that I see right now is this one. Do you see the overlap? Remember we were talking about overlap? Overlap is when this was a resistance, turn back. This was a resistance, it turned back. This one turned back. And finally it broke and now it's a support. Okay, this is a better support to be using compared to this one, because if I just use this one, yes, it does connect to this area here, but this one will connect much better. Okay, so if I pull this, if I take this and I pull it, it actually connects to even more things. Yeah. So it connects to this area here, it connects to this area here. It cut through one time. We'll let it slide. We'll let it slide. I respected it. Okay, so I would say this is a very nice support area to use. Okay, you know there's a chance that price can come here and still reverse, right? Price can come here and reverse in this little swing low here. There's a chance price will come here and reverse, but again, like I said, there's no perfect analysis. Your job as a trader, as an analyst, is only to find the setup that you think is the most probable. Okay, most probable. That means you are Bob right now. Bob is price. Bob reaches this door. This is door A. This is door B. Do I think Bob can open door A and go to door B? Right? Right now, I've identified two resistances. Two supports. Do I think price is going to come here and reverse, or do I think price is going to come here and reverse? Do I think this is a strong enough support that price will reverse here, or do I think Bob's just going to come here, open this door, and then go to this door, and then realize there's a lot of locks on this door? Then he has no choice but to turn back. Okay, I think for me, chances are price is going to reverse here, then here. I could be wrong. There's a chance that price might just reverse here. But again, like I said, your only job as a trader, as an analyst, is to identify the highest probability setups. Remember, like when it comes to trading, you don't have a lot of chances, man. You can't just keep taking loss after loss after loss. You need to find high probability setups. Out of 10 trades, you ideally should be winning at least 6 trades. Okay, or at least 5 trades, at least win half of it. This is not strong spot. Yeah. Okay, so now that I've identified my the strongest support that I can identify, I'm not saying that there's no other support. I'm just saying this is the strongest one that I want to take into consideration. We are now going to combine it with Fibonacci. So those who don't know Fibonacci, don't worry. Regulars here, I know you already know. Henny, Tat Choi, Desiree, Bob, Stephen, Fabio, I'm sure Simon, I'm sure all of you already know Fibonacci. But for those who are new here, if you don't know Fibonacci, do not worry about it. Somewhere throughout this year, we will be covering Fibonacci again. Okay, so we're going to pull out Fibonacci to see if there, yeah, Sabajit. Okay, if there are any levels that lines up close to your support. I'm going to change this to support so that we don't get confused. We change the name to support. We change this name to resistance. We always mark. You know, like I've been trading for so long, and until today, I still mark all my support and resistance. And because I'm human, right? I'm going to go watch TV and come back and I forget why I marked it there. So if I leave a note to why I marked it, then I won't forget. Okay, you know, just a little. Okay, so out of these 5 levels here, we've got 23.6%, we've got the 38.2%, the 50%, 61.8%, 78%. Obviously, 23.8% is the closest to your first support. We're going to get rid of everything else that is not the 23.6. Okay, so what is the Fibonacci representing? The Fibonacci is the door. Sorry, the support resistance is your door. Okay, so the support is the door. Bob is trying to open the door. The Fibonacci here represents the lock on the door. The closer the Fibonacci level is to your support resistance, the stronger the lock is. If it's very far away, it just makes me feel like, this lock is kind of flimsy. It's probably a really cheap lock. Okay, it's probably not your best lock. But if for some reason we can just nice, we can find a lot. We can find a few Fibonacci levels lining up on your first support. It just tells me that there's so much resistance there. There's so many locks. All these locks are made from like high industry. They're therefore like really tough locks. They're really to keep people up. Okay. So right now the 23.6%, it's kind of close to the support, but it's not that close. It's like in the area. So it makes me feel like, okay, the door has a lock, but the lock isn't that strong. Okay, there's a lock there, but is it strong? Maybe. Okay. Okay, so why do I say if there's more than one Fibonacci levels? Because there's so many different types of Fibonacci levels. We've got Fibonacci retracement, Fibonacci projection, Fibonacci extension, Fibonacci expansion, and then we've got the Fibonacci confluence where you combine all of it together. Okay, so now I'm going to see if there's a Fibonacci projection. Okay, no Fibonacci projection lining up there. Let me see if I can find any other Fibonacci that lines up there. Give me a sec, guys. Honestly, I don't see anything else that lines up there. Other than the Fibonacci retracement, I don't see anything else lines up there. Okay, so what, as a trader, when I look at this setup, okay, because why? This setup is going to be my entry. I'm gonna change this. This is going to be my buy entry. This is going to be my take profit. That's why I say support and resistance is always your entry, your stop loss, your take profit. And my stop loss is just going to be somewhere below here. Okay. When I look at this setup as a trader, I look at this setup, I'm just like, how do I feel about this setup? Do I think this is a high probability setup? Not really. Why? Because I would much prefer to see, now I know that there's a door. There's definitely a door here. But the question, now when I look at it, it looks like the door has a lock, but the lock is not a strong lock. It looks like a really weak lock. So when price gets here, I'm not super confident that it's going to turn back. I feel like there's still a chance that it's going to break through and hit my stop loss. Okay, so that's how when I look at this, I'm just like, should I get in for this trade? Probably not. But that's where you pull out indicators. Let's see if any indicators turn up. If we pull out indicators and we see, for some reason, we see an Ichimoku cloud lining up here. Okay, that will be a good confirmation that yes, there is resistance there. So again, like I was saying, look, there's hundreds of indicators. I've counted. I personally went to count one by one. Okay, I went to like 1, 2, 3, 4. Just trading view alone, there's more than 100 indicators. We're not even talking about those that are not on trading view. There's so many indicators. These indicators are created by a lot of people. There are a lot of Tom, Dick and Harry traders out there who are creating indicators right now as we speak. Okay, there's so many indicators. What indicators do you trust? What indicators do you use? You just use the one that you have been using, has been giving you results. So the ones that have been giving me results is Ichimoku, RSI, stochastics, MACD, moving average. These are my favorites. Okay, I did not put the zigzag here, okay, because this is a shared account. It's probably by someone else. Bollinger Band is an indicator I use as well. Don Chen channel is an indicator I use as well. These are some of the indicators. Oh, MA cross is an indicator I use as well. Okay, so I'm just gonna use 3 of my favorite ones right now, which is Ichimoku, RSI, and stochastics, and let's see what they say. If Ichimoku, RSI, and stochastics is in agreement with this buy, then I'm going to go in for this buy. Okay, so Ichimoku is in agreement with this buy. Why? Because price is on top of the cloud, and like I said, this is a form of support. So when price comes here, it's going to also hit the support of the Ichimoku cloud, giving me a bit more confident that the door has more than one lock. Okay, the second lock on the door is the Ichimoku cloud, or rather the Ichimoku cloud are the boxes behind the door. Okay, however you want to see it. Stochastics isn't telling me much. If anything, stochastics is telling me that price is reversing, which will align with our analysis, because for price to get to our buy entry, it needs to drop first, right? So when it drops, it will also drop on the stochastics. So if price reaches our buy entry and just nice, it's also at the support of the stochastics, it gives me even more confidence to get in for this buy. Same for RSI. RSI, I see like a slight uptrend here. Okay, if price reaches our buy entry and just nice, it's also at the support of the RSI, it's going to give me even more confidence in this buy. Okay, so that's exactly how we measure support and resistance, by combining other things with it. Okay, I've run out of time, but I do see questions. So let me try to quickly, using this example, it could be retraced either 23% or 38% of resistance 2. How do you decide which one will be reached? Oh, okay, good question, Desiree. So Desiree is asking, just now when we pull out 23, the Fibonacci levels, the 38.6 is also kind of near. And if you look at it closely, the 38.6 also has a resist support there. Okay, so how do I know which do I use as an entry? I will use the 23.6 because now that the Ichimoku supports the 23.6, okay, rather than 38.2. Also, I'll just put my stop loss really tight here. If I am wrong and price doesn't reverse at the 23.6, instead it reverses at the 38.2, I'll just take it as I lost a trade. That's totally fine. It's okay to lose a trade. Your whole job as a trader, analyst, is to find the most highest probability trade. At this current point of time, I kind of think that the 23.6 has a higher chance than the 38.2. That's why I'm using the 23.6. Why? Because the 23.6 will line up nicely with this horizontal. It will line up nicely with this Ichimoku cloud. Okay, that's why I would choose the 23.6 rather than 38. If I'm wrong and it really does reach the 38 and reverses at 38, that's totally fine. I'll just take the loss. I will just take the loss and I will review at how I can do better. And the next time I do analysis, I'll be like, okay, things to consider, blah, 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 blah. Okay, once candlesticks breaks and is there, time to enter the market. Once candlestick breaks support resistance, that is your sign from the candlestick to not get in. Okay, that's why the last thing, although I personally forget to practice this sometimes, I really encourage that you guys practice this. Okay, when price comes to this area, you are supposed to look for a reversal pattern candlestick. You are supposed to look and wait for a reversal pattern candlestick. Once you see, I cannot teach you guys this, we have no more time. Okay, once you see a reversal pattern candlestick, that is your confirmation that price is going to reverse from this area. Okay, I tell you guys this every Wednesday, every webinar, but sometimes I myself forget. Sometimes I just put a pending order, because for you to actually wait for price to come here and you wait for the reversal pattern candlesticks to come out, you actually need to be sitting in front of the screen and be staring at the screen for that to happen. Okay, so sometimes I myself don't practice, but that is the best. The best practice is to wait for the reversal pattern candlestick for your final confirmation to get in. Okay, you use indicators that you have access. That's right, that I do use that. Do you use standard settings for the indicators you mentioned? Yes, I do use standard settings for the indicators I mentioned. RSI, it's either 14 or 21. Most of the time I just use the standard. Stochastics, I use 21, 5, and 3 actually, not 25, 3, and 3. Good question. Good question. Yes, so it's 21, 5, and 3. Do you have a lot when it hits your stop loss so you can consider re-entering? I used to. I find that it makes me very anxious, right? So what I practice now is that I enter the trade right now. Let's say I think this is a good trade. I put a pending order and then I go do my own thing. I'm gonna, after, usually to distract myself, I go cook, or I go out with my friends, or I go clean the house or something. I will distract myself, because even with so many years of trading experience, I have to say, like, sometimes I myself still get emotional, and that's totally fine, because we are humans, right? We are humans, and we are really designed to be the worst trader because of how emotional we are. Okay, so to answer your question, I don't put an alert, because I don't want to see that once I hit stop loss, it will affect me. I know it will affect me. I'll be like, oh my gosh, what did I do wrong? Then I have to go and review. Okay, so usually what I do is I enter the trade for today. The next time I come back is tomorrow. Whether I win or lose, I myself am ready emotionally, mentally for the results. And then from there, I decide what I want to do. If it's a loss, I will go back, review, okay, why did it hit my stop loss? Oh, okay, next, the 38.2 was actually the better entry compared to the 23.6. Next time moving forward, I will consider taking the further entry. If I win, even if I win, I will still go back and review why I won. Okay, so yes. Okay, that's all I have time for today, guys. Thanks for joining. I will see you guys. I don't know when's the next time I'm taking you guys. I am doing 3 IC English this month. Let me check my schedule. The next time I see you guys is on the 24th of January. For Tak Choi, Henny, I will see you guys for Bahasa webinar, right? But the rest of you for English, I'll see you guys on the 24th of January. Okay, thanks guys. Thanks for attending. I will catch you guys. I hope your trading accounts grow. If you are encountering like losses, if you are like, discouraged, don't be. Go read a trading psychology book. It really helps. It really helps. You don't have to feel discouraged. I passed 6 prop trading tests, and I myself sometimes feel discouraged when I take a loss. Okay, so don't be discouraged. It's normal. Okay, bye guys. Thanks everyone. Thanks Fabio. Thanks Ellen. Thanks Henny, Desiree. Yes, see you tomorrow, Henny. Okay, bye. Catch you guys again soon. Happy New Year. Have a good year ahead.